All right, traders, what's going on? Jamie Setley here. It is December 19th, 2019, and this is the SB Trade Desk Midweek Strategy Webinar. So let me know that you can hear me. And then we'll get started. Hold on. AV is all good, says Pooja. All right, thank you. Super. All right, so first things first, let's look at accentuate the importance of some of those charts from yesterday. Hold on. In US dollars. So I'm going to bring that over real quick. Here we go. All right. This, by the way, I already had it up, but you can see that crude's at a massive, massive level. You know, if we turn down here, then I guess this count is still kind of on course. But if we do not, and we go through it, call it a breakout. That's all there is to it. Change your mind, right? So let's take a look at the US dollar index. This is the FCM1. And I had several charts in yesterday's posts that were, you know, I had a log chart, right? And an arithmetic chart. You know, people ask the question all the time, like, what's the right scale to use? In FX, I don't think there's really a right answer. You know, if you're looking, excuse me, sorry. If you're looking at, say, a chart of like, let's look at like a chart of like Apple or something, right? Actually, even better, I think, is Walmart. So if you're looking at like a long-term chart of Walmart, right? If you're looking at this, which is arithmetic scale, probably not going to make a whole lot of sense, frankly. You look at a log chart, it might make a little more sense, right? So you can see that you actually can draw in lines and whatnot, make sense on that. But if you're looking at like, you know, an exchange rate, which really, you know, doesn't move a whole lot, really, right? I mean, exchange rates over very long periods of time, sure, but even then, the price movements are small enough where you can still draw trend lines on, say, arithmetic scale or linear scale, right? So let's consider both, right? So I don't think there's the right answer. I think you kind of look at both and see what it is. So, you know, this trend line from the 2016, or actually, I guess it's technically 2017, first day of January, I think 2017, and 2018 highs is actually the same on both, right? So this is arithmetic scale. If you do arithmetic scale, this line here, right, the 2011, 2018 line nailed that low, right? If you go to arithmetic though, it still hasn't been touched. That was log scale we were just looking at. Sorry if I said the wrong one. But if you're looking at log or arithmetic scale, this bold line is the one that's been more important for quite some time. And if you remember, it also was the parallel that identified the top way back here, right? When you went off of those highs there, it hit that high. So there is use with this angle. And if I scroll in, I was making the point yesterday that, you know, back in early of 20, or the first quarter, early second quarter of 2018, you did have resistance back on it, right? You had resistance on it again. And then once you went through it, it was what I call liftoff, right? We just were off to the races. So as it stands right now, that line, which is a little bit higher, right? It's going to be 12,320. As I said yesterday, it's also the 200-day average. Okay, that's right there. And you've got, you know, frankly, just some important highs over there. I mean, you've got 12,3, you know, since last November, 2018. I think it might be about the same level as that level. It is the same level. That's, you know, so you can take it all the way over there. There you go. So we've got a lot going on. Up at this, say, 12,320 region, right? 200-day average, parallel, trend line, you name it. Okay, so all I got to say is pay attention to that level. If the dollar is lower, and this wasn't just a pullback, right? Then you're looking at, resistance at that spot. You get above there and really going to have one heck of I feel like that would set things up for an absolute explosion in the dollar, right? So, we had the longer term reversal signals back in October. Remember the big monthly J spikes and all that stuff, and we have followed through on it at this point, right? But if we fall through and then we end up reversing that, you have kind of a big false bear trap on the dollar, and those bear traps tend to go pretty sharp in the other direction pretty quickly. So you got to pay attention to this 12,320 up there. Okay. All right. So there's that. We wanted to let's look at DXY as well, because DXY had a pretty level. As I noted, the pattern was pretty ugly, but the pattern was pretty ugly, but the chart was pretty good. So the levels were pretty good. Yeah, so here's that chart again. Hit support right where you should have, and we are still thinking that you might push up into 97.60, 97.70, right? 97.60 right here, that level from the 19th, or sorry, not the 19th, from the 11th. 97.70 has been important since last November, and this is a 4-hour chart, but if I were to go daily, you can see that the 200-day average is right there as well, right? All right. Also, just great in terms of how the market has, the concept of symmetry within the channel really has been going strong, right? You had resistance here on the 25 line, support on the 75 line. The 25 line again is back here, which would be your proposed resistance. So we've traded off that level before. There's a lot there, right? Okay. All right, let's move on to our euro real quick. So euro did find some resistance kind of near where we thought, right? These moves are really small right now. But 1236, you did trade off, but you traded off the median line. At this point, there is nothing I can say that's going to be very interesting, other than watch the 110.70 area, right? We could have reversed from here. This could be something, where we work higher from. I just don't have that much confidence in it. The 111.10 area, you can see that area was important back in the spring, right? And it was important back in September. We made a high up there, and it's been kind of important here in December. So, you get back through this, call it maybe 1150, maybe it's worth chasing. I'm not quite positive, not quite sure. If I look at some of the volume stuff, we do have some near-term positives. You can see that we had I noted it today on Twitter, but we had a little bit of a reversal there today. So there we go. All right, so we did have a bullish, you can see that right there, right? We had a little bullish volume reversal, 2-bar reversal remember what that means. And don't forget, in the swing updates, I do have a little link there underneath the scan results that kind of describes all of the various volume things that I mentioned, right? Because I know not everyone's going to be familiar with that or know what that is. But we did have a volume reversal. We've had some pretty, I mean, even really short-term ones have been pretty good, right? You know, over the last couple of months, right? High here, buy here, would have failed. Short here, long here, right? I mean, you can see it, they're pretty good. And this one also of note is that this is on December VWAP. So we held the December volume weighted average price, which is a positive. So, you know, look, that's very small risk if you're trying to buy it with a stop below today's low. I did not. I actually think that the pound is maybe a bit better for that. And here's why. We had in cable, for one, you do have a very clear 5 waves down, right? 1, 2, 3, 4, 5. Okay. We are sitting on a host of levels here. 200 period average here, which is on the 4-hour chart, right? This is a parallel, the magenta parallel here. You can see crosses a low here. I believe that's 10.14 and a low here on 11.27 and right on it today. And also on top of the old high from 10.21. So a lot, you know, of stuff or considerations down here for, you know, support and a decent sized bounce. Okay. I am looking towards, so we are in this trade, or I'm in this trade, I can't speak for everybody, but at 30.15, relatively tight stop, right? Stop is going to be, you know, you're talking 129.85. Current ATR for pound is pretty high, so that's, I think it's, let's look and see what it is actually. Current ATR for cable is 108. So the ATR is, you know, the stop being, you know, 30 pips away. I mean, you're talking less than a third of a daily range. So that's, you know, if you can get that type of a stop, it's a pretty good entry. We'll see what happens here, but I like the idea. I'm looking back towards the 132 kind of 30 area. Again, that is the parallel here, which you can see does cross a number of levels. Could be a good short up there. You know, for pound. It's also the high volume level. Okay, so that whole area, I got the target 132. You could maybe, if this does work out, if you do turn up, you might be able to get a little more out of it than that. But throw the fibs on there, 38.2 is going to be 31.90. What I find interesting too, though, is that, you know, if you go into a period like, you know, we've had some really big moves, right? Like big up move, pretty big down move. Markets, after they do these kind of like very sharp moves, tend to go in maybe a little more of a non-directional consolidation phase. Things might get a little sloppy, and if they do, you know, 33.14 could be something, you know, down the road in a couple weeks. And what that could look like is, you know, maybe an up, down, you know what I mean? Just kind of like a choppy corrective advance. Probably not going to want to try to trade all of those legs of it because, you know, it's going to be annoying, but catching the initial bounce if you can and survive the stop is usually, you know, the better of the trades. So we'll watch for that. But yeah, looking towards that 132 spot in cable. What else is interesting? You know, not surprisingly, pound yen is at a level for a bounce as well. You can see here, you know, it's not perfect, but like the channel from back here from August and whatnot, you know, go off of this high here. And you do kind of, when you get there, you have seen some pretty decent, you know, some pretty decent bounces or bases to work off of. So wouldn't be surprised to see a pound yen bounce here. Again, I'm playing through cable. Dollar yen. So yesterday's chart is not that one. Had a chart in yesterday's post. We might just be kind of like up for a bit here in dollar yen. You know, after this was, dollar yen was looking pretty bearish to me after the reversing sharply off of the year open in, when was that? On 12, is that 12/2, 12/3, whatever, early December. And that all changed on this day right here, right? 12/12 was the big Chinese announcement thingy from Trump, and the market and risk just kind of ripped after that. Dollar yen hasn't done anything since then, but you know, you're still on the year open, whatever. But if we melt up a bit, kind of get rid of that. You know, it's pretty clear where the huge confluence is. So 2016-18 line all the way back to 2015, and it's going to be right there. And it's like really the very end of the year, and it's 110.70, and that is going to also be, of course, the high from May. So if we get up towards that area, you know, by the end of the year, you know, be interested in seeing what it looks like. But I'm just saying, kind of have that in the back of your mind, I think. So near term, you know, we had a big drop here, or not a big drop. I guess big is a relative term, but we had a drop. We did find support. Remember, I had 109.32 as a level. We didn't necessarily bottom right there. We went through it by like 12, 13 pips, but then we came right back, and here we are. That could have been it for today. Today could be a little swing low. In today's piece, I wrote that basically you have to maintain kind of a positive bias on dollar yen as long as it's within this shift channel, which goes back to the August low, right? So I've got that drawn here. You can see August low, right? High here from 9.19 or whatever, and then the low, of course, back on 10.3. And you do have to maintain a positive bias as long as you're within this, right? If we break this, different story. If we don't hold today's low, then 109, which is old resistance, okay, and the lower parallel is going to be your final level for any sort of constructive action to take place in dollar yen, all right? So just know that. But yeah, dollar yen might not be bad on the long side here. Could even play, you know, some yen crosses maybe if you didn't want to do dollar yen. Looking at here, let's look at Aussie. So I like Aussie on the upside. Remember, we were looking at 68.30 for support right here. This isn't hourly now. We never got there. We got to 68.39. Unfortunately, we didn't get 68.30. But what you've got here is 5 waves up, right? So let's do what Elliott himself did. RN, Elliott, hourly closes. 1, 2, 3, 4, 5, right? Back to the center line, 68.86, a level. Looking for a pullback to say, let's call it 68.6, low 68.60s, which is right here. That's the high from December 3rd, low from 12.13, very close, right? Support resistance on this level really throughout the month. So that's an obvious level to pay attention to. 200-hour average, et cetera, et cetera, et cetera. 5 waves up, lower 4th wave, could go on and on. Good place for a slight pullback here in Aussie from the median line, but we're leaving an order to buy it at say 68.65. Also, it's a good sign, of course, that the drop, the preceding action, was a 3-wave drop. So very clear pattern here in the Australian dollar, okay? All right. When I go to the 4-hour chart, I just scroll out a little bit to show you kind of where to look towards. And the area to look towards is going to be the upper channel line, which is about 70. Again, you do have two equal legs at 70.13. So just saying 70 is your spot to pay attention to if this holds up and we get going on the upside, all right? Kiwi, I don't know. Kiwi, if Aussie's going to rip, I'm guessing Kiwi will too, but like the setup's not as clear to me. Unfortunately, we did get tagged at 65.60, and who knows, Aussie could be a better trade from here. The pattern is a little cleaner for me on a short-term basis. My concern, or the only concern really at this point with Kiwi would be the fact that on a longer term basis, right, we have come back into we did come into why is this not there? I don't know. We did come into VWAP 2019 volume weighted average price, and that you can see right up here, right? So that was there. We reversed off of it, came back. You're still contending with it. So, you know, I hate buying into a level like that. If you get above it, maybe we'll look at it and see what it looks like. But Aussie dollar, on the other hand, actually, with Aussie dollar, we actually held the December volume weighted average price on these lows, and the 2019 volume weighted average price, which was resistance all the way back in July, is way up here, right? So kind of love to get a tag of that. On futures at 70.03, on spot, where is futures? 60 on 6,900, about a on spot, that's going to be like 15 pips short. It'd be like 69.85, but whatever. It reinforces the idea that kind of the area around 70 is important. So that's what I'm looking towards there. All right. Okay, and finally with currencies, dollar CAD is one that we looked at yesterday as well. And yeah, we had the big break here, right? So again, log chart looks like this, okay, where you're looking at 3160 or so for resistance. Linear looks like this, where you're looking for 3200 resistance, okay? And got to like the downward sloping 200-day average. So, you know, to me, the commodity currencies really look pretty good here. You know, dollar CAD, Aussie dollar in particular, right? And by the way, so this channel, you can see here, I have it on log now, but this channel, so when you trade within this channel so precisely as we have, you know, your targets are going to be based on the width after you break out, which we have. Your targets are going to be based on the width of the channel lines. So you take half the channel and extend it out, that's this one, and you take the full channel, which is this one, and extend it out. And obviously they increase, right? But with time, but just generally speaking, like, you know, this low over here, 2780 would be an obvious level, and that's going to intersect this towards the end of January potentially. And then the final one, 2460, which is this level over here, is going to be way out in May. So, well, that's way out, but and you don't really have to know where they are, because once you reach them, and that's just you know, you reach them when you do. So be it. But that's what we're looking at here with dollar CAD. Dollar MEX has broken down and is actually below the 200-week average for the first time in like 6 years, 6.5 years. So got to be a bear here too. Again, if you do get any sort of a bounce pullback, look at the 200-day average. And that's all I've got on the currency front for now. Okay. If we look at some indices here, oh, not that one. All right, so here is, let's go to S&Ps. So S&Ps have reached the parallel off the 913 high, okay? It's really all I can say. There's, you can show all the extreme indicator stuff you want, doesn't really matter, but this is a level that you would look for a reaction, okay? That's kind of all I've got to add to that. But if we don't, then if we're in really full blowout mode in the near term, then the next level that you're talking about is the 1-3 line from the October low bull sequence, and that is 32, is up above 32.30 at the moment. So that would be your next one, okay? Pooja says 1618 of the wave 3 decline in early December too. You talking about that drop right there? Oh, look at there. That's what you're talking about, where we are right now. Yeah. Yep. It's a big spot for sure. I suppose you'd want to, have to break this 3180 to get anything out of here on the downside. That maybe you're looking at 3158 or something like that as the next area of interest. Let's see if there are any other fib relationships though. Not that one. I want to see what this one is. So that next one, if we go a 1618, we'll put this in some weird color here. Hold on. That in green. We'll make Christmas colors. Put that in red. All right. So that next one is 32.32 or so, and that would be close to that 1-3 line, wouldn't it? So with that, you can see I'm measuring the largest part of the range, kind of since this corrective process. Because to me, this is A, B, C, D, E, big triangle, and now you're 1, 2, 3, 4, and then 5. That's how that's working. So yeah, there's a lot going on up here, that's for sure. All right. Put this in there so we have a little, maybe I'll throw this chart in there tonight too. So yeah, two spots to pay attention to, literally right now, and then 32 30s or thereabouts. Okay. All right. That for me is all I've got for today. I'm going to wrap it up. Obviously, pretty quiet. Not going to have, more than likely, not going to do a webinar next week, right? We'll do one. I mean, next week you've got Christmas Tuesday, Wednesday. We'll see about Thursday. I don't know. It's up in the air. I honestly don't know if I'm going to do one or not. But I'll let you know. And if not, then we'll get back to regular business in January. And I'll leave it at that. All right. So if there are no pressing questions at the moment. Oh, Pooja's asking about gold. Yeah, let's take a look. So gold. So you know I like gold, where we've kind of rallied or pulled back from. As far as like, in order to get this thing really going. So remember, we've had the silver gold non-confirmations for a little bit here, and gold is holding up, so that's a good thing. You do need to get right up through these highs at 1490, but really the big level, Pooja, to take out is going to be the following here. Let's look at it. Here we've got, okay. So right there, you see the VWAP from the high. This is gold futures now. It's still pretty much, what the heck is this thing drawing so weird? It's still pretty much in line with, well, it's actually above it now, but that's really the level that you need to take out. It's like 14.99. You know, I'd venture to say that if you did get above these highs right here at 14.92 or so, then it'd be a positive for me. And one reason for that is this structure on gold. So this is the the channel, from the December 2015 low. This is a 75 line, which was resistance, kind of support, and has been resistance here recently, right? So get through there, and I think you are dealing with something good. You would also have broken that trend line there. If we look at silver, silver was the real tell that things may have been actually bottoming, right? Because silver, if you recall, did come down into its annual VWAP, 2019 VWAP, which was really, an important level all year long. I mean, you can see, and not until we got up through it, for good back here on mid-July did things really take off. And then here we go. We dropped right into it right here. Okay. So, with the levels that we're at in the S&Ps, I mean, I'm on the lookout for any sort of volume stuff that suggests that maybe we're going to get some sort of a pullback. But yeah, good catch on that 1618 of the little December drop. And as for that, now I am ready to wrap it up. So I hope that helped you out with Pooja. I hope that helped you out with the gold pattern. But yeah. All right, so that's it. Again, I'll let you know if we do anything next week in terms of a webinar, but as of now, I really don't know. It's up in the air. All right, so thanks everyone. Have a great rest of your week, and I'll talk to you later. All right, bye.